The Minority Market. Episode 56. Reflection Exercises to Strengthen Your Mindset. If you want to grow in markets, you must understand one uncomfortable truth. Improvement does not come only from learning strategies, indicators, or financial concepts. Real growth comes from reflection. Reflection is the bridge between experience and wisdom. Without reflection, you repeat mistakes. With reflection, every loss, every win, and every emotional reaction becomes a lesson that compounds over time. Most market participants move from one trade to another without stopping to think. They close a position and immediately search for the next opportunity. This constant forward motion creates activity, not progress. The minority behaves differently. They pause. They analyze. They question their decisions. They build awareness. This habit alone separates disciplined participants from emotional gamblers. Reflection is not about self-criticism. It is about observation without judgment. When you judge yourself harshly, your mind becomes defensive. When you observe calmly, your mind becomes open to learning. The goal is not to blame yourself for losses or praise yourself for wins. The goal is to understand patterns, behavioral patterns, emotional patterns, and decision-making patterns. Let us start with the first exercise, daily behavioral review. At the end of every trading or investing session, ask yourself 3 simple questions. Did I follow my rules today? Did I manage risk according to my plan? Did emotions influence any decision? Write your answers honestly. Over time, you will begin to see repetition. You will notice which mistakes happen frequently and which habits need strengthening. Awareness is the foundation of change. The second exercise is emotional tracking. Most people ignore emotions until they explode into impulsive actions. The minority tracks emotions before they become destructive. After each trade or major decision, write down what you felt: fear, excitement, hesitation, overconfidence, or doubt. Do not analyze immediately. Just record. After a few weeks, review your notes. Patterns will appear. You will discover what emotional states lead to poor decisions and which states support discipline. The third exercise is outcome detachment review. Instead of evaluating trades only by profit or loss, evaluate them by execution quality. Ask yourself, did I enter according to plan? Did I respect my stop or exit rule? Did I size my position correctly? A losing trade executed correctly is more valuable than a winning trade driven by emotion. This shift trains your mind to respect process instead of chasing short-term rewards. The fourth exercise is mistake classification. Not all losses are equal. Some losses happen because the market moved against you despite correct execution. Other losses happen because of discipline failure. Separate these 2 categories. Market losses are part of probability. Behavioral losses are opportunities for improvement. When you treat both as the same, you miss valuable information. The minority studies mistakes carefully and adjusts behavior, not emotions. The fifth exercise is weekly performance reflection. Once a week, step back from daily noise and look at the bigger picture. Review all trades or decisions. Identify recurring errors. Identify strengths that are improving. Ask yourself one powerful question. If I continue behaving like this for the next 6 months, will I like the results? This question forces long-term thinking and discourages short-term emotional reactions. Another important reflection practice is identity alignment. Ask yourself regularly, am I behaving like the disciplined market participant I want to become? Or am I behaving like the impulsive version of myself that I am trying to leave behind? Your identity shapes your actions. When you consistently choose discipline over comfort, patience over urgency, and structure over emotion, your identity slowly shifts. This internal change creates external results. Silence is also a reflection tool. Spend time away from charts, news, and social media. Noise clouds judgment. Silence creates clarity. Even 10 minutes of quiet thinking can reset emotional balance and improve decision quality. The minority understands that mental space is as important as technical knowledge. Another powerful exercise is scenario review. Imagine how you will react to future losses, drawdowns, or winning streaks. Visualize yourself responding calmly, following rules, and staying patient. Mental rehearsal trains the brain to respond correctly under pressure. When real situations arrive, your reactions become automatic and controlled. Reflection also includes reviewing your expectations. Ask yourself, am I expecting fast results? Am I pressuring myself to recover losses quickly? Unrealistic expectations create emotional instability. Adjusting expectations protects your mindset and improves consistency. One of the biggest mistakes beginners make is reflecting only when things go wrong. Reflection should happen during winning periods as well. Success can create overconfidence and careless behavior. Reviewing wins keeps ego in check and reinforces disciplined habits. Over time, these exercises create something powerful: self-awareness. Self-awareness is the highest form of edge in markets. When you understand your weaknesses, triggers, and strengths, you stop being controlled by them. You begin to act intentionally instead of reacting emotionally. Remember, the market is not just testing your capital. It is testing your patience, discipline, and self-control. Reflection turns this test into training. Every experience becomes fuel for growth. Every mistake becomes information. Every challenge becomes preparation. Strengthening your mindset is not about becoming emotionless. It is about becoming emotionally intelligent. You will still feel fear and excitement, but you will not allow these emotions to control your actions. That is the difference between the majority and the minority. If you commit to reflection as a daily habit, you will notice gradual but powerful change. Your decisions become calmer. Your reactions become slower and more deliberate. Your confidence becomes quieter but stronger. This is the type of mindset that survives market cycles and compounds over years. Your journey is not about perfection. It is about progress. Reflect daily. Improve gradually. And remember, the minority does not grow faster. They grow deeper. That depth is what protects them when markets become unpredictable and rewards them when opportunities appear.